Is the housing market about to collapse? Let's have a look. Hello everyone, Florian.heise here, and welcome to another episode of HeiseSays. Grab your stein of coffee, and I thought we'd have a look at this article written by Alex Turner Cohen for news.com.au discussing, well, a tiny number, a tiny change, and perhaps a collapse or a tumble in the housing market. Now, is this just a piece designed to attract your attention, to get FOMO and people to read these articles? 100%. We're all worried and primed and concerned about the real estate market. Now, property has gone to the moon. Let's jump and have a look at a few prices. This is from SQM. This is the weekly asking prices for the capital city average. And we can see now all houses, all capital cities, 1.2 mil. 3-bedders, 1.1 mil. And you can quite clearly see on that chart that climb where it's gone up. If we change over to national, and we'll wait for it to refresh, you can see this is including all the regional areas. All houses, 780 grand. 3-bedders, 700 with change. You can see the climb there. So housing has gone up. Now, but if we look at this chart, think back to 2020, everyone, when we were discussing the pandemic, or 2019, when we were discussing property issues. Housing affordability has been something that we've been discussing on this channel since about the second year I was doing it. And it's something we've all been concerned about for some time. Most people are concerned with housing affordability. Even if you have a house, if you're into the market, you're concerned for your kids or for your family or your friends. Now, is this a question of housing just being out of reach of the average person? Is this the fact that people just need to sacrifice now more than they ever had? Is it that our culture's changed? We've put so much red tape, green tape, and restrictions on the ability to develop housing that it just drives the costs up more and more. Or we now have families where both partners have to work. It's no longer an option for only one person to work. Both of you have to work, and that flows through to the cost of housing. Honestly, I think it's a mix of all of those things together. One thing that I'm quite frustrated is, well, particularly the Greens, who are pushing for mandatory air conditioning in every property. Yeah, that's going to do well for housing. So let's have a look at what Alex is saying here, because, well, we're all primed to be interested in housing. It's part of our culture here in Australia. So, for most people, 0.1 might not sound like a very big number, but it could signal a change for Sydney property owners. Is she really playing up a 0.1% fall in property, guys? Really? That's because in the latest report released on Tuesday by property data firm CoreLogic, the New South Wales capital suffered a 0.1% decline in housing values. 0.1%. Let's bring up the SQM. No, wait, we'll bring up Sydney. Wait for it to reload. Come on. You can get there. There we go, internet. Okay. 0.1%. Even a 1%, even a 10% decline. We're sitting, 1.6 million for a 3-bedroom house in Sydney. So 10% is 160 grand. You're sitting at 1.5 or 1.4? We look at the chart, where's 1.4? Yeah, we're still not below that huge growth, that mountain there that's gone up. Okay, so, but 0.1. 0.1% we're doing an article on. 0.1. It's the only time Sydney has endured any kind of loss in its housing sector since September 2020, 17 months ago. So what? That's, a year and a half ago? We've had an insane last 2 years. It's just been crazy. Analysis found that nationally the property market is becoming sluggish and slowing down significantly in what could be an end to the windfalls enjoyed by property owners during the turbocharged year of 2021, when houses boomed 25% in value. Okay, here's the thing. Let me have a shot of coffee and we'll talk about this. So this article, if you jump over here, we can see it's titled, CoreLogic Report Finds First signs of of housing market taking a dive. You know, this is the first sign of a crash, of a correction, a 0.1% drop in housing values in Sydney. Are you serious? There's fluctuations in the market all the time. Or are we so damaged for property always going up? Remember, Sydney property fell, and then it jumped back up again. Or have we forgotten that? We're only talking 17 months. It's nothing. Property is a long-term asset. People don't flip this shit like you flip shares. There's a lot of costs and overheads in shifting property. It's a pain. Everyone thinks it's the bee's knees of investments, but there's a lot of cost. There's maintenance. You've got to deal with people. I'm preferring REITs or shares, but that's just me. So according to CoreLogic's Director of Research, Tim Lawless, Sydney and Melbourne have shown the sharpest slowdown. Well, of course. Okay, this is what I assume always happens. Sydney and Melbourne rocket to the moon. Property demand there just shoots up. And then, well, more people go for good old Brisbane and Adelaide and the other cities when they're more affordable. When Sydney and Melbourne get too hot, they cool down, they stagnate, maybe they even fall a little bit. But is that a dive? I mean, people, you've got to understand, the problem we have with property in this country is that it's set up in such a way to disincentivize people from investing in other things. How many times do we see newspaper articles or TV shows, everything about property? Where's the incentive to start a business? This article's written about a 0.1% fall, when year on year it's over 22% up. Brisbane 29% up. Darwin 12% up. Perth 8.5%. Adelaide 25%. Year on year, Melbourne 12%. Hobart 25.6%. Everything's going to the moon. And are they calling it at a 0.1% monthly fall? I mean, this is the insane thing, how they measure house prices like on a daily chart. I mean, while Sydney was down 0.1%, the Victorian capital was sitting on 0% growth. The month before, Melbourne experienced a slight uplift of 0.2%. However, in December, it plunged. No, Alex, you can't use the word plunged 0.1%. Okay, that's bullshit. I mean, we're talking what? Let's see. We're not even talking 1%, everyone. Okay, you're talking $1 million for a house. Okay, times, what is it? If we do 1%, that's 10 grand. Everyone. Okay? And we're talking 0.1%. So a tenth of a tenth. We're talking $1,000 on $1 million house. Am I doing that right? That doesn't sound right. Are we really fretting over? I'll bring up my Excel because I think I have to be stuffing this up, guys. Okay, there we go. I got $1 million. We do 1%, 0.1%. So we'll times this by this, and this by this. It's the end. The property's falling. I mean, come on. I don't know. I mean, are they trying to call the top? Is this the top? Are they trying to call the top in this? I can't take this shit seriously anymore. We've seen too much of it. We saw the RBA modeling a 40% fall. We saw every article discussing a 10% fall, a 20% fall. All the banks were pushing it. And then, of course, what happened? The government came to the rescue. They stimulated the shit out of the market. They threw money at it left, right, and center. People got holidays on their mortgages. There were articles in all the bloody newspapers and ABC about everything where professionals were thanking the banks for giving them a bloody holiday off their mortgage. And here we're talking about a dive in property at 0.1% in Sydney. When $1 million is not even, that's not even it's probably, let's double it, $2,000 maybe. I mean, Really? Let's keep going. Let's keep going. Although not as extreme as other parts of the country, other parts are already beginning these signs of a slowing real estate industry, the report found. Yeah, because, okay, slowing is different to a dive. Maybe this is just the insanity is wearing out. But don't worry, they'll open the floodgates. The pace of growth in housing values started to ease in April last year, when fixed-term mortgage rates began to face upwards pressure. Fiscal support was expiring, and housing affordability was becoming more stretched, Mr. Lawless said. With rising global uncertainty and the potential for weaker consumer sentiment amidst tighter monetary policy settings, the downside risk for housing markets has become more pronounced in recent months. The dropping desire for home ownership hardly comes as a surprise at a time when interest rate hikes are looming over the heads of every mortgage holder in the nation. Well, it's also, is there a dropping desire? The anticipated inflation is up. People are more worried about inflation. We're starting to see it in our day-to-day lives, just in the cost of shopping. You've got all of these uncertainties in the globe around the world at the moment, and their borrowing capacity is going down because interest rates are going up. Last month, the Commonwealth of Australia drastically changed its property outlook, I'm assuming the Commonwealth Bank, over concerns that interest rates could rise as early as June this year. CBA Chief Executive Matt Corman said his bank expected slower property growth of 4 to 7% this year. Most of the decline would begin in the later half of 2022. Okay, so not a dive. Slower growth of 4 to 7%. That's still beating inflation. Sorry, everyone. We're still recovering from this cough. It's getting there. We've had 2 days of dry weather in Brisbane now, so it's good. We'll see how long it lasts. By next year, in 2023, CommBank predicts a 10% plunge across the nation. So a 10% plunge. That may sound bad. Sure, 10%, you're talking $100,000 for a $1 million property. But are people going to be forced to sell? It's going to decrease their borrowing capacity. It will flow through. People who leverage one property to get into another, it'll decrease the amount they can borrow, and it'll cool down the market. And you may see a dip, 10%. But for people who can't get in the market now, who are desperately waiting to jump in, this isn't going to be a correction that's going to come to open the market up for them. I can't see that happening, to be quite honest, everyone. I just can't see it happening anymore. If we jump to, I'm just going to bring up my channel over here, and I want to show you a post I put in the, where is it? What do you think? What would you do if housing would fall, or housing fell 30%? 5% would sell, 54% would buy, and 42% would hold. So the majority of viewers of this channel would either be buying or holding. Very few of them would sell. Just something to keep in mind. So, and here we have the change in dwellings. Australia's property sector would grow at a snail's pace in 2022 at just 2.7%. Sydney and Melbourne would only rise 1.9% and 1.2% respectively for 2022. Property prices will take a turn for the worse midway through this year, and by 2023 will plunge a whopping 11%, according to the bank. Sydney and Melbourne will be hardest hit, the following year dropping by nearly 12% each in 2023. If you hear hammering, that's just the steel getting put in. We're seeing house prices ease in 2022, and already we've seen more supply come to the market. NAB's forecast is for house prices to remain flat at around 3% in 2022 before declining 10% in 23. NAB executive Andy Kerr said after CoreLogic released its February findings. Even if you get a 10% correction in 2023, it's still not going to be anywhere near affordable. We're still going to be high and be at the price levels that we were complaining about in 2020. That's the thing. This isn't the big correction that people were hoping for. This isn't going to make housing more affordable. I'd say this is just natural movements in a market which is heavily regulated and influenced by the state, mind you, but just natural movements as it's cooling down from being insanely overheated from that built-up pressure. We expect Sydney and Melbourne to experience the largest declines, while Brisbane and Adelaide will likely see less significant drops in house prices. Yeah, because our housing here in Brisbane and Adelaide is certainly more affordable than what you see in Sydney and Melbourne. So not all cities are suffering. The CoreLogic report noted that Brisbane, Adelaide and Hobart were recording considerably stronger housing conditions than their state counterparts. Brisbane housing values rose by 7.2% over the last quarter, months to February, while South Australia's capital was up 6.4% over the same period. See, this is what happens, guys. Sydney and Melbourne cool off. They see a drop in their value, and then people look at the poorer cousins, okay? The Brisbanes, the Adelaides, the Hobarts as a place to invest or to live. Nothing wrong with that. That's perfectly normal. And the government here is going to piss away so much money on the Olympics and everything. There'll be more demand for it. Regional areas are still seeing a bit of an uptick in interest. The report stated regional Australia continues to record a substantially higher rate of growth than capital cities. I can't see that lasting. Honestly, I can't see that lasting. That has the feeling of similar to a mining boom, guys. Over the past 3 months, housing values across the combined rest of state regions increased at more than 3 times the speed of housing values across the combined capital cities. So let's talk about this. So there we go, guys. Housing is going to plummet. The market will crash. Housing will be down 10% potentially in a year's time. We've heard it all before. We have. We've gone through article after article after article about housing predictions of it is going to fall. My issue in Australia is we have a cultural addiction to housing, and we've got a political class that use it to stimulate the economy. And that disincentivizes investment in other aspects of the economy. That's what it is. That's why everything is important. That's why nothing is manufactured here. And can you blame people? Why deal with all the bullshit of running a business, all the green tape, all the red tape, all the crap you've got to put up with when you just chuck it in housing? Let someone else handle all the other problems. I mean, how many of you, be honest, in the comments, how many of you have, you run a business or you work a job, but you've also got a property or maybe a few investment properties, and you're making more just on the capital growth in these properties than in running a business? Or maybe you're not even making more, but the stress, the comparison in stress, it's just nuts. This is what we need to address long term. It's not to do with housing affordability. It's incentivizing Australians to invest in something other than housing. I can't see it happening, can you? You tell me. Thanks for watching, guys. If you're a fan of the channel and enjoy the content I create here, there are a few ways you can help out. You can join us on YouTube or Patreon, sign up for SelfWealth or Stake, use our affiliate links at Amazon, eBay, Independent Reserve, or Broadband. You can even buy our own merch. We have pocket squares from our website. Now, someone was asking for me to get some Steins. Now, I have intended to for some time, but I can't, the drop shipping, it's all from overseas, and we already can do that with Teesprings, with other things. I want to actually get some made, and that means I have to store them here. Now, to do that is going to be impossible right now with the house in the state it is. We had some storm damage as well that we've got to repair and all these other issues. So once, we're up and I've got the floor in and we can close in some parts of it, then I'll look at doing that. So let me know if you know any good suppliers. Anyway, thank you for watching, guys. Like, share, subscribe to the channel, and I will refer you to a recent video I did. Which one? Huge 30% inflation is coming. Good old Harvey Norman. Everyone's favorite guy. Take care. Have a great day. I'll see you later. Bye for now.